little over half an hour to go into it. So it seems the Bulls have managed to wrestle control back. Karthik Kumar is joining in, and he manages some funds at Axis Mutual Fund. Karthik, great to have you on the show. Thanks for joining in. So what have you made of the slight wobble that the market witnessed? I only call it a wobble because, 3-4% index level correction, perhaps not much of a correction, right? And look at it. The Nifty has cruised its way back to 22,100 plus. So what's the overall stance and how are you looking at both the large cap space and the broader markets now?
So, as you rightly put it, it's been just a wobble. We obviously are coming off a very strong 2023 and especially strong Q4 of 2023. So it was only natural that the market sees some sideways movements, and there were other things that added to it. But we remain quite constructive on the markets itself. While we think over the next quarter or so, at an index level, the markets might be range bound, given that politics takes center stage, not just here, but globally as well. But we think there will be plenty of stock selection and sector selection opportunities through which you can add value to the portfolio. So I think it will be a good environment for active fund managers in general, because in sideways or range bound markets, the return dispersion between stocks tend to be quite high.
All right. Hi, Karthik. Good afternoon. Nigel on this side, and good to see you in. So stock specific is the name of the game. But, one sector that's done very, very well is autos and auto ancillaries. How are you all positioned out there between autos and auto ancillaries? And within autos, what's the theme you're most bullish on? Is it the CV cycle, the PV, the two-wheelers? What is it? Two-wheelers have already seen a big run in the last 1 year or so.
So, as you rightly pointed out, this two-wheeler space looks good from a growth visibility forecast. So I remain quite bullish on two-wheelers. And within two-wheelers, I remain more, I have a slightly higher tilt towards two-wheelers and auto ancillaries in general. As you rightly pointed out, two-wheeler companies in general reported pretty strong numbers. And the growth visibility still remains pretty high. And if exports do start picking up as is expected through the course of the year, I think that situation only gets better. So we remain bullish on autos and auto ancillaries in general, with two-wheeler being the focus there.
Karthik, you're underweight IT, technology names. How much more of a earnings downgrade do you expect for the IT large caps, or even in terms of a PED rating? What do you expect in the next 12 months for IT?
Okay, so I've been underweight IT for quite some time now, and the reason is I think the street still the street expectations still remain a bit elevated for FY25 and 26, and we've been seeing constant earnings cuts across the space, even leading up to the event yesterday. So what happened yesterday in terms of incremental data point only keeps that pace going. So I think there's still downside to earnings estimates at a sector level, which is why I continue to remain underweight that space in general.
Okay. What would be the biggest portfolio overweights for you right now?
So in terms of overweight, I continue to remain overweight on autos, as I mentioned, two-wheelers and auto ancillaries. We also remain overweight in the healthcare space, and I'm also overweight power plays as well.
Okay, so since you brought up power, let me take up that third segment first, because, the narratives are great and we're talking about more thermal capacity, which will probably require, more inputs throughout the value chain. There's the whole green transition, renewables, etc. So within power, are you looking at utilities? Are you looking at power equipment manufacturers, transformer companies, grid companies? What part of it?
So within power, we have a good mix of exposure, actually, both in terms of generation and in terms of transmission. As you rightly pointed out, there is a structural demand out there. Plus, the government and policy in general is quite supportive of that space. And if you add to it the fact that the valuations in that space is reasonable with good dividend yield, that only adds to the attractiveness of that sector there.
Karthik, at current reckoning, your preference would still be more towards the large caps in comparison to the mid and small caps because they have outperformed so much in the last 12 months?
So it's with regards to my strategy, it is less of a focus on which cap space it is. It's more about an opportunity at stock level. So right now, I have a book which is around 65% give or take large cap, and the other 35% spread across mid and small cap, and that's been the distribution for some time now. So it's less to do about the allocation to the space, but more to do with stock selection. But as you rightly hint at, which is mid cap and small cap have had a fair bit of run and revaluation in general. So I think now it basically comes down to picking the right spaces within mid cap and small cap rather than looking at it as a whole, as a bunch, as a one single entity.
Got it. Okay, 65-35%. Just one more question. The PSU stocks, they've caught everyone's imagination. You know, for the last many years, everyone said, this time it's going to fizzle out, this time it's going to fizzle out. Well, the stocks didn't do double, triple, they did even better than that. But to be fair, even the financial performance improved a lot of these companies. You know, the guidance they gave the markets, the achieving of those, the profitability improved itself.
Yeah.
How are you all positioned on the PSU themes? Because that's really been the big theme and that's been the big leader of this market.
As you rightly pointed out, within PSUs, what you've noticed is that if you look at it from a very quantitative perspective, the quality of these companies, when you look at ratios across balance sheet, cash flow, income statement, and if you look at the trends therein, the trends have consistently improved. I completely support your thesis that over time, the quality of these companies have improved from what they were as a baseline case a few years back, and which is reflected in the fact that the markets have recognized this over time. And we do have reasonable PSU presence across sectors. As I talked about, there is a reasonable presence within the power space, within oil and gas space, and even some selectively within the financials as well. So we are well distributed in terms of just the exposure to PSUs across sector, and I still think there is room to grow there if you look at room for stocks to perform there if you pick and choose your bets in that space.
Karthik, two segments of the market which have underperformed. One is QSR and the other one is specialty chemicals. Due to subdued demand conditions, prices of agrochemicals and chemicals have been on the lower side due to the issues in China, etc. Do you expect either these two or both these sectors to mean revert and maybe the cycle is turning? Any signs?
So far, I don't see through purely from a data perspective, I don't see a pickup in earnings, or I don't see a change in preference or positioning in both those spaces. So I think while they may be good bets in the longer run, in the near term, I still believe there is still some time to go before both those areas start looking attractive.
Okay. Just a word on financials as well and how you are sort of looking at the breakup. It's a pretty large basket. On one hand, there is this whole eternal hope that large banks, particularly private banks, that will finally start performing and that big move will happen. It has been eluding us till now. But on the other hand, you've got a lot of the capital market players, I mean, whether it's the brokers or the exchanges, and those stocks have been going through the roof. So where is your positioning? How are you sort of navigating financials?
So within financials, I've been underweight the large private banks, and most of my tilt has been towards selectively towards some PSU banks and then some towards NBFCs and capital market plays, as you pointed out. I still see growth visibility being much stronger in that space, growth momentum being much stronger in the subsectors that I kind of touched on compared to the private banking space, which is why I still continue to hold that position and be underweight within the private large bank subsector within financials.
Karthik, thank you very much for joining in. Enjoy your long weekend.